Welcome back to another episode of the Anatomy of the Trade, and today we're discussing the current market update. All right, let's go right into it. Here on the top, we see four of the indices. Those are futures, and as we could see right away, we have a lot of movement to the downside on the daily bar. Franz, how would you describe this movement in Wyckoff terms, or what comes to mind?
It's what I think we would refer to as a change of behavior. Certainly, we've had a consistent rally going up, really nothing that looks like this bar, really going back into whenever we want to go back into since the rally's been underway. So at least a change of behavior. And as you've been pointing out, and I guess I should let you kind of take over and say what you've been pointing out in terms of what we can expect as this rally kind of, plays itself out.
Sure. Well, first of all, that statement by Franz is absolutely correct. Look at the bar that we have. This is one of the largest bars to the downside since the low of March 23rd. So definitely something different is happening. And then from the low in mid-May, that is most definitely the largest down bar. So it is a change of behavior, and therefore we are expecting that the price will start behave differently from this point on. We're going to conclude the day most likely with, the increased volume signature that's going to identify some supply presence. So it's a profit taken. It's maybe also distributional. At this point of the session, when we are recording close to 9 a.m. Pacific, still we'll have to see. Also, this bar, this change of behavior reverses the last two bars to the upside. And more importantly, that climactic bar that we were describing as increased volume, increased spread into the overbought condition. And now we see that the close is below this bar. So this is quite significant. Just tells us that we are done with this move. And the biggest question, are we done with the whole move? So before we do that, let's go to the intraday and just kind of see how it all developed. And Franz, I'm curious to hear your thoughts. Let's go to 15 minutes on the top information. So how would you label it here?
Okay. Going back to, I think that's 6 a.m. on the 5th, we've got what I think we'd refer to as a buying climax. We've got spread, we've got increased volume, and this is during the U.S. session, I believe. Am I not correct on that, Rahman?
Mm-hmm.
So we've got, obviously kind of the last gasp of excited buying, and I think we can conclude that some selling is occurring in that. Some supply is being presented as that demand pushes us up into that area. So there's an automatic reaction off of that buying climax that happens within about 30 minutes, and then a test, and that sets our trading range. So here we are in this trading range. We've got an initial test and then another attempt to move up, which at the time you'd almost think that was up thrust action, because we've got a trend moving into this consolidation that's coming into it, moving up. So our first bias is going to be that we're going to continue higher after this consolidation's done, and we've got to get some proof that that's going to change. So initially we've got this up thrust. We're thinking, well, it could be an up thrust or it could be up thrust action. And then what do you see happening, Roman?
Well, yeah, I kind of really like this whole idea that still at this point the bias is still up. We can't really negate that. I think this was a very interesting reaction in itself. It happened after the US market hours, but it was significant. It created a higher low. So again, a little bit, you know, not that visible as a distributional reaction, but at the same time, the quickness, some increased volume signature that we don't see in previous non-US sessions, suggests that, there is some selling. And then obviously lower high, and we started talking about how there is some deterioration and there is some vulnerability around this area. Obviously a sign of weakness. This was very interesting just with the Fed announcement last night. How do we translate this into our analysis? So attempt to go up, up thrust, local up thrust, and then come back and then failure again, and especially on this bar right here. So going into the close, not the most favorable position by any means, with the potential top information, and which is suggestive that we might have some kind of reaction, at least into the low of where the climactic run began. And, look at where it stops here for a second during the overnight and still continues to the downside. And the US session is still much, much weaker. So a very pronounced weakness. And hopefully that helps you guys with the intraday picture. All right.
Can I ask you
Yeah.
before you leave that screen? Can I ask you one question? That last bar yesterday afternoon that you had the arrow, you had your arrow pointing at. We have this term, a know-it-all bar that reflects, kind of shows us what the evolving bias might be. Would
I
you
would say
term that as
pretty
well?
much, yeah. I would say that this is probably that bar. And this is the 15-minute chart, so let's just quickly go on the 1 hour. And then, you kind of could probably see it. Even these two bars already very suspicious, but, anything in this area just basically tells you like, there is some kind of vulnerability, and there could be an attempt to react. And obviously, it does happen. All right. Well, as we talk and look in and compare this bar right now as it still unfolds to anything what we've seen before since the low, and maybe this bar right here, and even that looks a little bit better than what we have right now. So we are starting to see the same type of behavior as we've seen, earlier in the COVID-19 reaction. And that could, seriously conclude the move to the upside. By the way, everything was kind of logical, of where, this reversal started to happen. Our objectives were 33 and 31.80. So
Mhm.
those were the targets. And when the price came to this level, we commented on the climactic nature of this bar, but we said that there is still so much momentum that we might still be carrying through this level. It did. And then right here, you have your intraday confirmation. And then today after the close, I usually like to look at the close and not, during the day, because, anything could happen. We still have plenty of hours, 4 hours before the close. But it looks ominous. It looks like, a very real selling. And most importantly, we were looking for the commitment below the climactic bar. So if the close stays below this level, this would be a true reversal. Now, the
Mhm.
biggest question now, Franz, is just what's going to happen next, right? So
Mhm.
uh, I'm kind of seeing two scenarios here. Scenario number one, and that is something that you were referring to. So let's say that maybe the price stops here or just has another stopping day, maybe into this area right here into this cluster, and then it stabilizes. and it has some kind of small trading range, which is going to have a little bit of the reaccumulation type of nature. And then the price still goes up into the next upthrust. And from here, it fails in a more meaningful way and then goes into a more meaningful consolidation. So that's scenario number one. Scenario number two is going right into that consolidation. And we've talked about in WMD classes and on Twitter, I believe that um, when we're gonna have that change of character behavior bar, uh, we would be expecting the reaction to come into this target, into this area. 2880 is one of the most important levels that I'm looking in general right now. This is the level of the climactic action that we've experienced in January, February of 2018. So second scenario would be a continuation to this level, and this is where the bears are gonna just enjoy their ride and they're gonna say like, I told you so, that's it, we're going down now to March 23rd low. I doubt that that's actually gonna happen because the rally has been pretty impressive, and it's a bull market for this rally. So come into this significant 2880 and then starting to create a trading range here into the election and into 2021. And the majority of volatility should be on that first leg down. This is kind of a given because a lot of the people are going to start selling as they were buying on the way up. They will be scared now not to be caught up in something like COVID-19 reaction. So a lot of weak hands are going to be definitely, selling, and a lot of strong hands are going to scaling out and taking some profits on just a tremendous run that we have had. So these are the two scenarios that I'm looking at. Franz, what do you think about those?
Mm-hmm. Um, from the standpoint of the longer term remaining a bullish bias, do you have any feeling about which of those two might be a more bullish reaction, or can either one of them play out?
Well, I think short term, a more bullish scenario is obviously stopping here and then developing some kind of testing and then uh, going up again. It kind of reminds me a little bit of the Bitcoin. So we've stopped buying Climax and then 2 days we kind of were there, right? Something like this. And then we have a very pronounced day to the downside. So in this day has that change of behavior characteristics, right? Increasing
Mm-hmm.
supply, increasing spread as well. But yet look at how it stops, then reacts up, tests, has a higher high. And now at this point, we're still kind of inconclusive as to what's going to happen next. Today's day, you're showing maybe it's, some weakness and attempt to continue. We still would need to overcome this low right here to say that, yes, indeed, there is a continuation. But this could be a roadmap to a slightly more bullish scenario first. Um, than the scenario where we just going right away to around 29, 28, and then creating multiple waves within the structure.
It's never that easy, right?
No, no. All right. What else is catching our eye, right? So again, most important bars to the upside, most important bars to the downside. In Nasdaq, it's slightly different. So these are the two bars right here, at the end that we are concentrating on. Russell, what's important here? Definitely underperforming in a significant way. So here is that level of this last commitment to the upside, which has climactic characteristics, and we're below that. And the next level obviously is going to be this. So we have to see where the close is going to be. The Dow is the same way. Here is our climactic run, and here's the close, at least for now. Again, I am reiterating that the close is going to be extremely important. So just look into that.
Could I interrupt for 1 second?
Absolutely.
About why the close is important. As I understand it, it's because that's really kind of the stamp of the institutional investors. The big money is going to determine where the close occurs, and we really want to see what their intention is. Am I right about that?
Well, absolutely. And I would say 2 points here. The first one right now is 9 a.m. as we're recording this video, Pacific. So we have 4 hours to go. The market is so finicky all the time that, in 4 hours, it could rebound quite significantly. So you might just, add to your short positions here and they might not work out. So you have to be cognizant of, the time that's being left in the session. That's number one. And secondly, that's exactly what Franz has said. There is a lot of institutional and algo trading, commitments at the end of the day. There is a lot of rebalancing of the portfolios at the end of the day in the last 30 minutes. So those are going to be, one of the most important minutes in the session. So we do rely and think about the close, all the time. Okay, Franz, what about, maybe some other markets? Let's look at oil because, we've been commenting about the oil for quite some time. And I think that this, comes to exactly our thoughts on oil with today's reversal. Look at this, the last climactic bar, and then the test attempt to regain that uptrend. And that happens already on the diminished momentum characteristics. We could see this from the 3 legs up that we have had. The
Mm-hmm.
thrust is diminishing, so therefore the momentum is diminishing. We also see this in the spread itself. The up spread is smaller than the up spread that we've had off the low. And this is very, ordinary in the way how the up wave develops like this, especially out of the oversold condition. We have a lot of orders to buy, and then those orders are diminishing. As buying is diminishing, that's how it's being reflected in the price. So looking at the character with which the price approaches our target zone, we are saying that once we have the reversal, we are done. And here is that reversal. And obviously, like with the S&P and other indices, we want to reverse this bar and we want to see the close below the low of that bar. And obviously, we want also to see the character of this bar to be somewhat different than anything what we've seen before. So the largest down bar is probably this one right here. I would assume that we definitely would have the increase of the supply on this bar, and most likely we just, gonna close below this level today. But what does it mean, Franz? What do you think?
Well, oil, I mean, first of all, there was a big build in inventories yesterday. The the economy runs on energy, and it could have obviously larger implications for the overall economy and corporate profits and so on and so forth going forward. So I know we think of oil stocks themselves as being late economic cycle indicators, and we might be seeing that here with this attempt to move back up to the very top of the price range that it had been trading in for most of 2019, 2020, the early part of 2020 anyway. So from an economic standpoint, but from a kind of a Wyckoff interpretation standpoint, it's a change of behavior. We could be going into a trading range. We could be seeing, probably not an immediate reversal back down to the lows, but maybe that 32 target is a place to be thinking about. What do you think?
Yeah, I'm thinking that we just basically in this range now, between these two levels, 40 and 23. It's kind of hard to think that, oh, this is, these two levels that we're kind of targeting. You could have, clusters here as well, something like this, and then the midline somewhere here around 30. But that's probably what it is, an oversold condition here. First attempt to stop the capitulation, second attempt to stop the capitulation, and that seems to be in the same zone. The price spent a lot of time right here, so I would be thinking that yes, indeed, 32, 31 is going to be our first target, also with local support here. And that would give some kind of value proposition for somebody who is thinking that this was a really good rally, so they could have some value at around 31, 30. So there might be some demand right there.
Another thought that comes to mind is I was really interested in your analysis of how the spread changed through each of the three legs on the way up. Do you think we would see something sort of, the mirror image of that? Or how do you think, what sort of spread behavior do you think we might see just,
Mhm.
based on your
Yes, and that's
historical?
a very interesting question, and I usually like those because those are really good intellectual puzzles. And I would be thinking that, yes, the first leg to the downside might be the most aggressive one. Why? Well, probably the psychology of market participants would dictate that if if somebody is in the long position and has quite a substantial profit, then they will be rushing to close out their position almost immediately. That could create, a surge of orders to sell. So there might be acceleration right off the top. Plus, whatever buying we have had here, it was somewhat less than on the first and the second leg up. And usually we would say like we want to see the price come back to the level where that aggressive buying has stopped. So probably somewhere here around 32. So that first initial leg to the downside could be, the most aggressive. But at the same time, usually the conclusion of the any type of move or the reaction might have some climactic action. So at the end, we might have just like a smaller climactic type of bar. All right, interesting question, Franz. What else? Let's discuss gold. And I know that you've been very active with metals and with gold in particular. So what are your current thoughts?
Well, I guess my current thought, and we don't go all the way across the entire trading range, that this still strikes me as being backing up action too. But we have a very large cause for gold historically back into really pretty much back into 2016. And this is essentially the breakout from that major consolidation zone, and it still has the characteristics of backing up action. It's got the range itself is relatively narrow, even though I guess if you're trading futures in this range, it seems like a wild ride, but compared to what I think compared to what otherwise might be a high volatility area, it's really not. It seems like it's pretty well behaved, pretty orderly. The volume across the entire range, we've had a few areas where some selling has come in, but the overall level is not that pronounced. So yeah, volumes down, the supply that's out there, I think, is being absorbed. And it seems to me like it's behaving like, pretty much textbook backing up action. You'd have to see a significant break of the bottom of the trading range here to think otherwise. And we've had that last attempt to move prices down was not successful. I mean, there was an attempt to commit prices lower that didn't work. So it shows that there's still enough demand to absorb whatever supply wants to come, and keep us in consolidation. And my anticipation still is at some point we're going to break out. We've got a bullish direction eventually that we're going to break out in the direction of.
Hmm. Okay, yeah, I would agree with all of those thoughts. I think it's very significant that the volume signature is so low relative to even the places where we were consolidating before, uh, and before the liquidity event itself. So the
Mm-hmm.
level of the volume is just so different. It's almost like nobody wants to sell. Nobody really actively want to buy at this point either. Um, and so in this type of cases, whenever that volume signature is so indecisive, we really have to look at the price, and the price will be the decisive force for us to say, what's going on. And as Franz has said, there was two attempts to go down, and both of them have failed. There was no follow through to the downside. So we are just looking at this as a bullish scenario right now. By the way, Franz, we do have to do the anatomy of the trade on gold because, even though I'm participating in silver, in a very meaningful way, kind of like my concentration of the portfolio in metals in silver, but, I made a mistake here in gold, so we definitely will have to discuss this. Speaking of silver, uh, one of the uh, charts that I like to look at, for silver is that long-term chart. Obviously a shakeout action and look at how it rebounds so well. And this price action right here around 17, if it's gonna hold, it's gonna try to attack and retest the 18-19 area, and perhaps the most bullish scenario could be just a continuation to 20 and then some kind of pullback. But that yet has to be seen. We still have to overcome the 17 area, which is still, acts as a magnet, but what kind of action we're going to have here? It a little bit reminds me of the action in oil as well. In what sense? Well, we have quite a lot of absorption here at the bottom and on the way up. So this is one buying wave, both value and momentum. And then we have somewhat of a lesser degree force behind the buying on the second wave up. So the structure of the reactions that we have had is also quite positive. So that still suggests a continuation. Well, we might have some kind of, small reaction, but that still suggests a continuation. So this third leg up could be like in oil with the characteristics of the diminishing momentum, if indeed it happens and we are not collapsing here. So I'm very curious to see if that's going to be the case. Any thoughts on silver, Franz?
I just love that analysis. And silver is the more speculative area of the precious metals. Um, if we are in a bull market for gold, silver is at some point going to catch up and uh, make all the speculators happy that are bullish.
All right,
Those are my
well,
thoughts.
let's see if that indeed will happen. And as we're closing this recording, this session, we're still pretty much at the lows of the session for the markets. So far it looks absolutely as a change of character, change of behavior, suggests that we are done with this up move. Since March 23rd, I would say this is the largest bar. But having said this, obviously we need to see what kind of close we're going to have just to confirm. And hopefully, guys, this is helpful for those of you who are tracking the markets, on the daily basis. Thank you so much, and we'll see you next week with the next episode of the Anatomy of the Trade. Thank you, Franz.
Thank you. Thank you, Ramon. We always learn something. We all always learn something from you. Thank you very
Thank
much.
you. I appreciate this.